All right. Morning, everyone. Let's get going here. All right. Friday session, the S&P, we managed to kind of find a bottom in U.S. markets toward the middle of the session there. You can see in the S&P we tested the same level about 3 times and just sort of drifted back up toward the middle range for the day. There's another reasonable correction we've seen for the first 2 or 3 weeks, or the last 2 or 3 weeks have been the first corrections that we've seen in U.S. markets in a while. I think yesterday capped off 3 weeks of declines in U.S. equity markets, which obviously is significant. We're seeing us go back to the same sort of theme that we saw the last time we had some selling. Light sweet crude off significantly. We're under $45 a barrel. Brent is down under 55 as we speak, and we're getting to a point right now. There's so much oil coming online in the States and not enough demand in the States. Right now, as a U.S. Producer, you can't export oil. So it's getting to the point now where there's no storage left in the States, and I think the oil market is starting to see that coming. Eventually, there's going to be such a flood of oil in the States that they're going to have to just start axing prices in order to boost demand. So that's, I think, kind of ahead of us there. Unless OPEC does something, or unless there's some sort of significant move there, then I think oil actually is going to come down lower. I think we'll probably take out the lows, in my opinion. Okay, we also had the U.S. price index on Friday, which actually showed a decline versus an expected gain. That was interesting because you initially saw U.S. Treasuries really sell, the yields in U.S. Treasuries fall. The actual bonds started to rally, and you saw the U.S. dollar start to sell off a little bit, and then literally lasted for maybe 4 or 5 minutes tops, and then you started to reverse and go back the same sort of course, with yields pushing to the upside, with the dollar strengthening again, which is quite incredible. And I think to me that was really significant. So I don't know why the market reacted like that. I know that the U.S. dollar long position is about as big as it's ever been in years at the moment, and you would have thought that treasuries are probably positioned accordingly as well. So I would have thought that a number like that would have created a hell of an unwind, but it didn't. So that's going to be interesting to follow going forward. Consumer sentiment also dropping a little bit in March versus February. So data may be softening up a little bit. We'll have to see if the market really actually reacts to that. All right, in Asia overnight, we a little bit mixed. Once again, Australia down a bit on the back of lower miners, lower oil stocks, things like that. Shanghai once again outperforming, and then the rest of the markets are a bit of a non-event. The yen kind of hanging into the same level against the dollar, again making a new all-time closing high against the Nikkei. But other than that, nothing that I think is. Oh, what was important out of China overnight? We had some of the interbank lending rates, which actually started to fall a little bit yesterday, which I do think is important. That things have been getting quite tight in there, even though they've been cutting interest rates. It hasn't helped anyone because the interbank market has been so tight. People worried about each other and worried about default and that sort of thing, so they haven't been wanting to lend to themselves. So I think that is actually significant out of the States, or out of China. All right. Our chart of interest coming out of Business Insider overnight, and I'm going to try to expand this a little bit for you. Sorry, it's not even easy to see on Business Insider. Let's just pull this up here a little bit. So basically what we've got here is we've got a chart running back for all the way back to the 1970, starting here in 1970 going to current times. This is U.S. dollar strength on a quarter-by-quarter return. It's a great article on Business Insider over the weekend about U.S. dollar strength like this, and every time that we've ever had this kind of U.S. dollar strength has preceded a crisis, and here you go, all of the top tier ones. Now look how strong we are right here. So this is the second biggest U.S. dollar move quarter on quarter in 50 years. Sorry, this is only 45-year chart. So at least 45 years, maybe longer. Okay, so this is, I mean, the biggest one was in 1991. That was the emerging market debt crisis, I believe. Here you can see the Asian crisis. That was the only as much dollar strength as we saw. Here's Lehman. I mean, you know, U.S. dollar debt downgrade down here. I mean, look how, I mean, this is unbelievable. This is quite a telling chart, and this is one of the things to me that's been going off in my head is quite an alarm bell. Is this anytime you see asset classes doing things that are this unnatural, there ends up being significant counter effects somewhere. And so, you know, when I read this article, it really threw that out to me. So. And then it also mentioned the types of corrections that we saw over these U.S. dollar rallies. And I think that that's one of the reasons why the S&P is now starting to strengthen at the moment, starting to weaken at the moment, along with all this dollar strength. You know, you're seeing the German DAX is around 20% off of the lows, or not off the lows, off of the breakout that we happened. I think it's about 30% almost off of the lows only maybe 4 months ago. And this is all due to stimulus. It's not just all due to stimulus. It's all due to a weaker euro. You know, the euro's weakened by 20-odd%. So the index goes up by 20-odd%. Now the dollar strengthened by, you know, almost that sort of equivalent amount. I think the S&P is going to have to start to fall by that sort of equivalent amount, simply because the fact that these guys have so many earnings offshore. Earnings are going to get hammered on the back of it, and I think it's going to be headwinds for a long time. It's also, you know, you are going to see us start to import some deflation and that sort of thing, and so it's simply just not going to flow through in the numbers with the stronger dollar, if you ask me. So I think that you know, the S&P could really have considerably further to fall. Doesn't mean the rest of the markets are going to fall. The one thing that I will mention is that in most of these scenarios where you get the big bout to U.S. dollar strength, it's really bad for emerging markets. So, you know, that was one of the things that they mentioned in the article, and I thought that was quite interesting as well. So just do with that what you will. All right. Moving on, corporate action today, we've got African Rainbow Minerals out with earnings. Looks like their earnings per share, headline earnings per share number was a bit of a miss. They also saw comments that they're going to review their capital. They're going to start to exit certain mines. So, you know, I think this is the way that a lot of these guys are headed in this slump. You could see here, I think what's also important to note is that the revenue number is higher. These guys have been, in order to try to kind of not see such a barrage to their earnings, they've been coming out and they've been pumping more supply into the market, even though the price and their margins are so much lower. They've been trying to pump supply just to kind of keep earnings up so they can maintain divvies and that sort of thing. I think that's what we've been seeing in the market, and it's obviously just making the situation worse because there's more supply coming onto a market with falling demand. All right, and then we've got Remgro today, which is coming out after the market closes. We've got a lot of stocks going ex-div today. We've got Discovery, Massmart, Anglos, British American Tobacco, Grindrod, Siboney, and ShopRite. Discovery is going ex-rights today, guys. Don't screw that up. You're going to see it open up significantly lower this morning. I'm not 100% sure. There's a little bit of confusion around the pricing. I know that for every 100 shares, you're going to get 9.8 additional shares at $90, but then you've also got to factor in the divvy, and then you'll get your rights. So, you know, if this thing will up and significantly lower. Don't sit there and try to buy it necessarily on the open this morning because, you know, it's opening lower. Just make sure that you're paying attention to that. All right, key factors out today. We've got basically just a slew of data in the States: empire manufacturing, industrial production, capacity utilization, net long-term TIC flows. So not a lot to look forward to until then. Let's get into a couple of the maps here. I'm going to keep it really simple this morning. Sorry I took so long on the whole dollar strength story. In the back of that, I just wanted to show, sorry, I'm looking at the wrong thing. Meant to type DXY. There we go. There's a US dollar index. I mean, this is freaking incredible. You know, this is against the entire globe. You know, we've strengthened by 20% just since August. I mean, that's quite spectacular. And I think, you know, one of the things that we're going to have to look at here is start to really gauge the impacts of how this is going to happen. This is starting to look more like a long-term shift, and how it's going to impact the rest of the markets. But either way, this should definitely put some continued pressure on the emerging markets. Should start to put some continued pressure on the U.S. equity market. We've just never fared well, and typically this kind of U.S. dollar strength preceded a crisis. So just keep that in mind. Let's look at the Aussie here. We talked about this, I think, on Friday. We're probably definitely looking to come down here and to test some support. I mean, we were shockingly weak to close the session on Friday. We just seem to have gotten weaker almost every day. You can see here we opened up a little bit this morning, trading just below 46,000. And I think that our first real level of support here is at 45,550. And to me, we also kind of traded right back down to previous lows. We just took them out, or recent lows. We just took them out on Friday. We're hopping up a little bit above that this morning, but I think we're definitely going to get down to 45,550 to give us some sort of test before we can go higher. And then the only other thing I was going to look at this morning is Discovery. Personally, I think that this thing has to come in here and test the 120 at some point. We had a huge breakout here. We had a breakout after this the rights issue announcement. And what I'm going to look at on Discovery, when we look at the back of that, is we're going to look at Steinhoff. We're going to go back at Steinhoff. Now, I want to show you what happened when they announced the rights issue. Sorry, we're going to go back a little bit. So they announced the rights issue down around here somewhere. Same sort of thing. We broke out, okay? We broke out here in Steinhoff, so I think the rights issue was announced right in there. We broke out, ran up like that. Here's the rights issue. The day the rights issue came, gap down, literally just traded down well over 10% over the next kind of month and a half in Steinhoff. If you look at Woolworths, we'll look at the exact same thing. Sorry, I can go to your chart, at least on Woolies. This is, let's see, I think this is the rights issue in Woolworths. Right here, and then this is the sell-off that we saw after rights. So this is the build-up after they announced the rights issue. This is the sell-off that we saw right after the rights issue came. So I mean, it's two compelling examples, I think, of the build-up, guys buying the share in order to get the rights right after the rights issue is announced. Then after the rights were issued, the sell-off that we saw that came shortly after. So keep that in mind for Discovery, guys. Could be a near-term correction coming in the share. And that's it for today. Good luck out there.